Hi, it's Ollie from Get Geek, and today I'm doing a video on leverage on Etoro. Now, please note the information in this video is not intended to be investment advice, and if you want investment advice, you should seek a licensed professional, and also past performance is not indicative of future results. Now, this statement is very true and massively applies to this video. And before we get stuck in, I want to say, unless you know what you're doing with leverage, then it can be very dangerous. And I would recommend staying away unless you know what you're doing with it actually. And I also urge you to do your own research in this so that you fully understand what you're getting yourself into. Now, the reason I say this is, for example, if we were to look actually at Etoro's page, the very first thing that you see at the top of that page says CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. Now, 75% of retail investor accounts lose money when trading CFDs with this provider. So that's 3/4 of people will lose their money. So this is why I'm talking about leverage, and I'm also warning you about leverage to do your own research. And it says you should consider whether you understand how CFDs work and whether you can afford to take the high risk of losing your money. Now, these statements, that's like the first thing on their page. So it's obviously there for a reason, so that you understand that it is pretty bad and you can mess up. So if you actually go to the leverage definition page on Etoro, you can even see there that there are limitations that are defined by the European Securities and Markets Authority, ESMA basically, and applies to retail clients of Etoro Europe Limited, SISEC regulated, and Etoro UK Limited, FCA regulated, and also to residents of China who registered their accounts on or after the 25th of May 2020. So this isn't just Etoro putting in restrictions, this is actually governments and financial regulations of certain jurisdictions that are applying restrictions for your safety so that you do not lose all your money. So what is leverage? So if we go through this page, there's actually quite a good definition here. It says it's otherwise known as risk level and is a temporary loan given to the trader by the broker. So it enables you as the trader to open a trade of a larger size with a small amount of invested capital. Leverage is presented in the form of a multiplier that shows how much more than the invested amount a position is worth. So this example should hopefully help you understand it. So the best way to understand leverage is through an example of how it affects your profit or loss potential. If you trade with no leverage at all and invest $1,000, for every 1% move in the market, you can gain or lose $10, which equals 1% of 1,000. So then in comparison, if you were to invest the same $1,000 and using times 10 leverage, the dollar value of your position would be equal to $10,000. So 1% of $10,000 equals $100. For every 1% move in the market, you can gain or lose $100. So then what that technically means then, if you came in with $1,000 and you're using times 10 leverage, if the market moves 10%, you're going to lose your entire capital. If the market moves 11%, you'll lose more than your capital, and then you'll be in debt because you'll owe $1,100 or $1,100. So I'm now here on my virtual account, and I'm going to give you an example of how this looks. So say for example, I want to place a trade in, I don't know, Litecoin, just for example. It's the weekend, so everything is actually shut. And if I go trade, now, basically, if I was to put in $1,000, that's how much I want to trade, with 1 times leverage, my exposure to the market is 1,000, and I because they're $43.07 for 1 Litecoin, I would get 23.22 units in the market. Now, say I was to change this to 2 times, my exposure to the market is now $2,000, and I'm getting 46.45 units, even though I'm actually only using $1,000 of my own capital. Now, different asset types have different limitations, which you can see here. So, for example, it's 30 for major currency pairs, 20 for non-major currency pairs, 10 for commodities other than gold and non-major equity indices, 5 for CFD stocks and ETFs, and ×2 for cryptocurrency. Now these are set based on how volatile the asset is itself. So say if I was actually to go and place a trade in some stocks, it is the weekend, so the market is closed, but you can see here that I now have the option for a 5 times as well. That wasn't there before when I was looking at the Litecoin. Now there is the option, I believe, to trade up to 10 times on stocks, but you have to prove that you are a professional trader to Etoro. Now I've never done this, and I mean I wouldn't recommend doing it either. So one of the scary things with leverage is that you can actually lose more money than you originally invested. The thing with leverage is that if you're doing well, you will do well a lot quicker, but if you're doing bad, things will get bad a lot quicker also, and so you'll lose money a lot quicker as well. So this could be one of the reasons why 75% of people lose money, is that they take their money out when they maybe should have left it in. But I think the real reason, in my opinion, is just that people don't really understand the maths. And the thing is, which is actually quite scary, is you can lose your capital and more when you start doing, or when you start using leverage. So for example, if I show you this web page here, which is on ForexTraders.com, and I'll put the link below the video. So they're saying margin calls are a real possibility with CFDs. So newcomers to CFDs are surprised to find out that there is a greater risk for margin calls than with traditional trading. If you do not pay attention, you can easily lose your investment and more. So consider this. Company A, B and C trades at $100 a share. To buy 100 shares would cost $10,000. You decide to buy 100 CFD contracts with 10% margin or 10 to 1 leverage for $1,000. The price moves to $112 and you decide to close your position with a gain of $1,200, i.e. $12 times 100 shares. For your investment of $1,000, you would have more than doubled your money. But what if the stock had gone down $12? Your loss of $1,200 would exceed your invested capital by $200. You would have received a margin call and your general account would be charged for $200. And for simplicity, they ignored spreads and fees, but that you get the picture. So this is one of the real worries that comes with trading CFDs. It's the fact that it's not just your capital at risk, you can lose more than that. So the beauty of it is traders are only required to put forward a small amount of the total trade value. However, if the trade goes in their favour, they are entitled to 100% of the profits. But the reverse of this is also true, in that the traders are also responsible for 100% of the losses also. And this does happen on Etoro. So say for example, I'm copying Harshsmith, and even though he's been blocked from the platform, there is a handful of trades that are still outstanding that he has. So say if I scroll down here on Harshsmith, you can see right here that all of these have lost more than 100% of their value. So this is a little bit more complicated because Harshsmith has decided to short the market here, and he expected Shopify to go down in price, and he's done a ×2 leverage, so it's a little bit more complicated. So basically he invested $2.60, and now because it's gone the other way, so the price has actually gone up. So he opened at 355.04 and now the price is 911.27. The overall profit and loss is minus $8.15. So if we were to close this trade out now, we've lost our entire capital of the $2.60, and we actually owe eToro's $5.55. So one way to prevent against this is to include a stop loss, which I think eToro may even enforce when you're using leverage, is to put a stop loss in place. But I mean, even here, Harshsmith has put in a stop loss of 1,087.93. So he was willing to let that go. Well, I don't even know what that is, like 400%, maybe even 500. Not entirely sure, but somewhere around there. So people who are starting out may see that their loss of minus 313.33 is pretty bad, which it is bad. Now, a lot of people who don't know what they're doing would probably come along and panic here and close out of that, which, to be fair, could be the right thing to do. But say they do close out of that, then some people will then try and recover their losses. Now, at least with Harshsmith, it's only $8.15 that I've lost overall, so it's not the end of the world. But say, for example, a beginner trader may be investing a lot more of their capital than they should be because they don't really know what they're doing. And so then they may try to recover their losses, and then this is where it gets dangerous because basically you're gambling. And so I'm pretty sure this is why governments and regulatory boards have been forced to limit the amount of leverage that you can use.
So originally I recorded the first part of this video on Saturday, and I was hoping there was going to be a bit of a movement on Bitcoin over the weekend to show you an example of the leverage and how much difference it makes, but there wasn't. So I decided to wait till Monday when the real market's open, and at the moment people are boycotting Facebook due to the way they treat misinformation and hate speech. So I decided to do some buy and sell trades to show you the effect of leverage on this. So this is my virtual account. So if we go into my portfolio here, and then if we scroll down, you will see those here. Now it's actually pretty even. Well, it's not far off at the moment when you look at it like that, but that's because I've done 3 of each. So you can do a max of up to 5 leverage on stocks. And I've done different leverage amounts, so 1, 2, and 5, and 1, 2, and 5. The only one that's not a CFD is the 1 times buy trade here. The rest are CFDs because they're using leverage, or they're a sell trade with leverage. So the basic, your standard buy there, which is done at 1 times, I put $100 in each of these. It got me 0.48 units because the price at execution, it should have all been the same, but there's a slight difference. I don't know why, but there obviously was when they were executed. So there's just a slight difference here. So on this trade here, it was opened at 209.98 and it's now at 220.23. And so that kind of got us just under half a share. But we've made 4.8% profit, and that's there. So then if you look at the times 2, it is near enough double. That, like I said, the price has differed slightly on opening there, and then on the times 5, it's pretty much times 5. Now that's great if you're making money and you know what you're doing, but like I said over and over again, you really have to be careful here, because the thing is, you've only come along with $100 here and you've managed to get more. Well, on the times 5, it's as if you've come in with $500 because you've then got 2.38 units, because the price of a share was 210.17, and so basically if you got $500, you got 2.38 of them. So then if we look at the sell side of things here, now this is where things get kind of bad. So if you just done a 1 times, then you've lost 5% there, so that isn't that great. But if you look at the times 2 and the times 5, well, we only came in with $100 of capital here, and the market's moved from 209.63 to 220, and basically we've got the equivalent exposure of having $500 in the market. So we've lost minus 24.88, so that's nearly a quarter of our capital that we came in with. And this goes back to what I was saying earlier, that you can lose more than what you invested, because you will get 100% of the profit here on the times 5 when it's positive, but you're also liable for 100% of the losses. So that's where it gets really dangerous. And so this is why I really think you should only use leverage if you know what you're doing.
So I hope this video has been helpful, and I would recommend for you to read around the subject anyway, just so you fully grasp and comprehend what can happen when you use leverage, because there is the potential to lose a lot of money there. If you've got any questions about leverage or even Etoro, please let me know in the comments below, or just let me know what you'd like me to do my next video on, and I'll get back to you. If you like this video, please give it a thumbs up and consider subscribing to the channel. It's been Ollie from Get Geek. Thanks, bye.
If you've not signed up for Etoro yet and you're thinking of signing up, then there's an affiliate link down below the video where I will get a kickback if you decide to sign up using that. It doesn't cost you anything extra, but it helps support this channel. There's a load more educational videos around the subject on my channel if you want to go check it out. Thanks for watching, and I'll catch you in the next one.